Und ich spreche jetzt mit einem Mann, der lange Jahre für Goldman Sachs im Bereich Edelmetalle als Analyst gearbeitet hat. Ich freue mich, Joshua Crumb begrüßen zu dürfen. Hello, Crumb. Nice to meet you.
Hi, nice to meet you. Thank you for having me.
Let's talk about the gold price first. We see a consolidation in the last few weeks since beginning of October. The question is the consolidation now gone?
I mean, from a short-term perspective, it's obviously always very, very difficult to predict. But I think the one thing that we can be quite sure of is look, the global economy. I think the numbers are starting to pick up again. We're running into these very short cycles where the economy starts picking up again, led by emerging markets, and then starts stalling out on really lack of key commodity supplies, energy. So we're running into these quick cycles. And we see that once these cycles start picking up, the gold price rises, and then it falls again as people get very uncertain to what's going to happen next. But I do think that the long-term trend is clearly higher, relative to bonds or other equities. Gold has outperformed for the last 10 years because it's a store of wealth, and the world is very short of good assets to invest in to store your wealth these days. So yeah, I mean, I think it's going to continue to go higher.
Do we see a new all-time high in the next month?
In the next month, probably not. I mean, obviously there's a lot of uncertainty and waiting to see what happens with the U.S. election, the Chinese transition in power, and of course, I don't want to be an American coming to Germany and talking about Europe, but clearly that focus hasn't gone away anytime soon. So.
Has silver more potential than gold at the moment?
I guess it depends on what people that are buying gold and silver, what their objective is. I think the core value of gold is money. It's not a speculation. It's a store of wealth, just like a fixed income investor would buy a bond. It's something to save for a rainy day. Silver has quite different properties. Silver is something that we consume. So when it's more like copper. I mean, yes, it has fundamental value as a store of wealth, and many people buy it that way. But I think it only goes up when you see the economy really picking up. I think fundamentally we're at a point right now where the real demand is for a store of wealth, and that's why I think gold will continue to outperform silver in the short term. But silver has very good qualities over the longer term.
How much speculation is at the moment in the gold price and silver price, because many investors are afraid of an inflation?
Yeah, I mean, I think what you have, I mean, central bankers everywhere are telling you that there's no inflation. Our fear is deflation. But look, gold has been going up at a compound interest rate or compound growth rate of about 20% a year over the last 10 years. And you can say, okay, well, that's just gold. It's probably speculative. No, the cost of mining gold has gone up at the same rate, and that's just gold. We can talk about copper, same thing, 15% over the last 10 years. That's inflation. Soybeans, 15% over the last 10 years. That's inflation. The things that matter, you try to store your wealth for a rainy day, but the value of that wealth in bonds is being eroded every day by real inflation. Maybe it's not headline inflation the way people calculate it, but the real inflation is clearly there.
And do you think the central banks in Europe, especially, and the Fed, are doing a good job now?
It's so tough. I mean, it's tough on what their mandate is. I mean, the two central banks have very different mandates. Because the U.S. has this dual mandate of both employment and price stability. I think it's a very dangerous thing what the Fed is doing. So these are stock and flow issues. Sorry, I mean these are either growth and wealth issues. So they're trying to print money to pick up wealth, but what they're doing is to pick up growth and keep employment high, but what they're actually doing is debasing the currency and actually destroying the wealth that's been saved for the last 50, 100 years. So I think what they're doing is very dangerous. In the U.S., people need to save more, and yes, that will have ramifications for short-term labor markets, but it's better than destroying generations of hard work and debasing your currency. The European Central Bank, a little bit different thing happening there. With the European Central Bank, it is about price stability, but what the assets they're buying, the credit worthiness of the European Central Bank is quite questionable. And so look, we're in a very challenging time. I think the people believe in what they're doing, and I think they're being very creative. But in my core views, I think it's better to protect the integrity of work ethics and value rather than short-term employment. And so I think they're doing a terrible job in my worldview.
And is there a real danger of double-dip recession in USA?
You know what? I mean, the U.S. is despite a terrible debt situation, the U.S. actually has one very strong thing going for it in what's happening in the shale oil revolution. Really, what the world has been choking on, in my view, the reason we're not running at 4 or 5% global growth rates like we should because of the expanding middle class, is because we're short on things like energy supply. So what's happening there in the U.S.? The U.S. has these twin easings, where energy is getting cheaper, as well as obviously the very, very easy financial conditions. So I think the U.S. in a relative position in the short term will look very good compared to Europe or Japan and the other OECD. They'll still look really bad compared to China and the growth markets. But I think the U.S. will do all right until this debt really starts to bite.
We have talked about gold. We must talk about mining companies too. They have showed a real underperformance in the last years to the gold price. Do you think there is an extra potential in the next years for mining companies?
Yeah, I mean, I think the story with gold, mining companies, and it's very similar to what's happening with oil producers and copper producers and all these companies. What you had is a real cyclical rally, where they had sort of premiums to their underlying commodity that was giving them a nice margin. However, in the last few years, that cyclical premium has gone away, and it's really just cost push inflation coming through. So the margins are getting eroded. But it's always a good time to buy when price is cheap. I have no doubt that all these prices, whether it's 6 months, I don't know, whether it's a year and a half, they're all going to be much higher. And so these companies have a fundamentally sound asset. So their share prices will go up when their margins go up, and that's going to take a little bit of growth.
And do you have 2 or 3 great firms for our visitors?
Yeah, sure. I guess the other thing I got to say is, because we don't know that duration, because the underlying math I believe is actually very simple and where this trend is going to continue. Because we've got a lot of uncertainty, you can't time it very well. So you need to focus on companies that have good balance sheets, good management, that's not wasting their money, because that's the opportunity cost. The opportunity cost is to hold it until it actually turns up. So if they're being well managed with a good balance sheet, now is a great time to buy. I am particularly invested in not necessarily just some producers. I'm involved in some more development stories, which very much fit my worldview. I mean, one of the companies I'm involved in is Aster Gold, and Aster Gold is all about this same issue. We bought an underpriced asset because people believed it could never be permitted, and the reasons it couldn't be permitted I didn't think were very natural. I mean, we can create a very new, clean, modern mine that doesn't impact the environment, and now you've got local unemployment at about 50%. So they need jobs. They need to make rational decisions about permitting, and so there's companies like that I invest in. That's my current focus, and I believe that kind of company will do very well.
Joshua Crumb, thanks a lot for this interview.
Yeah, no, thank you for your time.